and I'm looking at crude here, and I was telling everybody in our community that there's an opportunity brewing here in crude right here, and we call that a structure cleanup. There's a hole in the profile. It doesn't mean that we do. I mean, we could easily have a double distribution trend day as well. We've migrated the point of control higher, so it's possible that we keep this zone today. But at some point, it may be something that's repaired and has some structure. But yeah, what I don't like is that we've got no excess on the upside. I'd be much more excited if we had excess to the upside.
Yeah, that would be great.
NASDAQ, what is this? See, same thing. Got two zones of single prints here in the NASDAQ. That's what we call poor structure in the profile. It's just impulsive trade where, like the auction's moving higher, but nobody's checking to see if those prices are valid. And, in terms of trade location, that could be like if you were long here, you're kind of at risk because you've got these singles that they can easily clean up. So just kind of watch that. But let's get started, and then there may be a trade coming. We'll see. It's Friday, so we're always uber selective and uber patient. And I just got to set an alert in here because I'm just watching something. Great. Oh yeah, now they're pushing through. Hang on a second. Hang on a second. What am I doing here? I am 78. Okay. Welcome to our Friday Q&A. Glad to have everybody with us. Just real quick, a gentle reminder of the risk involved with trading, specifically with respect to futures trading. There is risk, and we want to be mindful of that risk at all times. If you do not have an edge, if you're not confident in your ability to consistently pull money from the markets, you need to be very mindful of whether or not you should have money working in those markets, because the risk is substantial, especially if it's hard-earned wealth that you're trying to grow exponentially, and then you start losing exponentially. So that's why we always focus on a plan. That's why we always focus on risk being the only objective thing that we have absolute control over, is how much we risk. I'm Josh. I'm the founder of Trade Profile, and with me is JP, and we're your happy cohort to guide you and lead you today. Between the two of us, we're getting closer to that 25 to 30 year. After a while, it just all bleeds together.
That means we're getting old.
It means it gets old. But that stuff isn't relevant. What's relevant is what we're going to talk about today, which is using the profile to see value and benefit. And I would have to say, if I think about going back on conversations that we've had over the last several weeks and months, that this bit that we're going to talk about today really demonstrates how profiling stands above and apart from any other way to arrange price data. And I hope that after today you can't see markets the same way. I really hope so. I think it's going to ruin markets forever, in a good way. And this was kind of the thing that was really helpful for me, and it is based around this challenge. Okay, so not all prices, I don't know if you knew this, for some it's self-evident, for others it's not, but not all prices are as significant as other prices. So, the challenge is what prices should I avoid, and what prices should I be more active at? So as we're looking to express risk in the market, because that's the only thing we have absolute control of, what prices should I avoid, and what prices should I be more active at? And next week, as part of our development pathway, our community is going to be looking at value placement and what to monitor, and it's really going after this challenge. And it is thinking about every week we're looking at these three objective areas. We find competence in the market exists where the overlap of these three are. And one of them has to do with behaviors in the market and auction competency. And so this one's going to speak specifically to auction competency. And what it is, the risk is that we're going after, this is the risk we're trying to avoid, is that the trader who does not monitor price in relationship to value has a heightened probability of poor trade location and being trapped. Let me say that again. The trader who does not monitor price in relationship to value has a heightened probability of poor trade location and being trapped. Translation, or taking losses that are unneeded. So, you know, I reminded of Jimmy Dalton saying, trade location is the best form of risk management. So, yeah, and by the way, any of you who have ever benefited from Jim's work, send some thoughts and prayers. He just went through the hospital, had a minor stroke, and we are all thankful for Jim and hope he recovers swiftly. All prognosis looks great, but just wanted to put that out there.
Wow, didn't know that.
So here's how the auction helps us. Is that the principle at play is that price is important, but not as important as time and value spent at a specific price. So the accumulation of time and volume at a given price defines the relative meaning of that price to the auction. So let me translate that. Basically, the more transactions that take place at a price makes it more meaningful. This is like if you go to buy a house, because I think there's great correlations between a housing market and a financial market, because a housing market is a continuous auction in the same way that a financial market is. When I go to buy it, it's like the question is like, how do I know that I'm getting a good deal? Or if I'm going to sell my house, how do I know that I'm getting a good deal as a seller? And we would say, oh, well, if I can buy at or below value, that's great as a buyer. If I can buy, or if I can sell at or above value, preferably above value, that's great as a seller. And the question is, how do we determine value? And we look at what? We look at comps. That's the nomenclature. So we look at comparable houses in inventory that match kind of what you're looking to sell or buy. And then we go, here's where a lot of transactions have been taken. Therefore, this is what we can see as current value for this inventory. Same thing applies in the financial markets. And the ultimate outcome of that is that you can observe value across multiple time frames, and we'll look at this, and discern the strength of each value area or node, and you can add these references to your trading plan. Talk about having a plan. Part of building a plan is determining what prices do I want to be active at. I think this is one of the challenges why traders struggle to build a trading plan, is because they don't know how to predetermine areas that they want to be interested in. And man, JP soybeans making new highs. Good night.
Ripping.
We talked earlier about that potential move to 923. I wouldn't have thought it would have happened in 2 days. That's just fantastic.
Yep, that's a huge move.
That's a huge move. So let's get looking at some of this stuff and what do we mean by value and how we discern that. So let's start. Well, let's look at soybeans here, for example. Okay. All right, so we're watching soybeans has been making a significant move. So if within a day time frame for just today, the question is, okay, how can I determine value for today? Where is value for today? And the way that we define that very simply is we just look at where the volume point of control is. And this is the point. This histogram here on the right is showing me the contract volume at each price. So the price with the most volume, that's what we call the point of control. So that is the fairest price. You had the most number of transactions by contract at that price. So that's your comps, right? So right now, if I'm looking at this auction, if I buy soybeans, do I have good trade location or bad trade location? What would I be doing? I would be buying soybeans above value in today's time frame. So that would be bad trade location. Why would I ever buy above value in this time frame. Now, there are ways, and this is when we talk about multiple time frames. Okay, so what I'm going to do here is I'm going to go out and I'm going to set, let's see, I'm going to set my cumulative. So I'm going to load 30 periods here, and you're going to see that there is so this is looking at the same histogram, but looking at it over 30 trading sessions. And actually, you know what that is? That's 30 calendar days. Let's make this 40 just to. Yeah. You can see that there is a larger node right here at 923. So that's a value in a larger, it's going back a larger amount of time. Now, what's happened this morning is that there's now a larger node here. So the largest node of the last 40 session or calendar days is here. So where am I in relation to that? Am I above value or below value? And I'm hoping it's self-evident. Above value. Above. Excellent, excellent, excellent. So if I bought this, is that good trade location? Yeah. No, and it's got two checks. One, it's above value on a day time frame, and it's above value on a multi-day time frame. So that the place where it would make sense is if I have divergence, where, like, say that there was on a larger time frame there was a big node out here. Okay, so if I was below value on a larger time frame and I was above value on a shorter time frame, then I might be able to use that as saying, hey, someone's willing to do business. And that's what actually IB high extension here. That's other time frame buyers who are willing to do business above today's value. So that's somebody who's thinking about the larger area of value. In fact, it looks like we're returning. There's an area of untested value right here. So that's kind of where the target was, and that's the area we identified this week. Is if we could stay above 890 was a zone we were looking for. Then we got a big move yesterday, and so now we're kind of in playing ping pong between these. Yeah, it goes back to what we're talking about posture several weeks ago. Yeah, looking at how value plays between multiple time frames. So where there's convergence on those time frames, and as part of my plan every morning, like let's look at soybeans here on a long-term chart. Okay, so I've got a number of different profiles overlaid. So this is a weekly profile. This is the monthly profile. So that's January. Here's December. This is the last month kind of exploded. So this is kind of a rolling 30 days, and this is a rolling 90 days. So I can kind of see, all right, on a rolling 30 days, I've got a point of control here. On 90 days, I've got a point of control here. I have a big high volume node up here. So that's going to be a spot to watch. And I could, obviously we're targeting that 923 level. But the question is, from where we've come, how do I express risk in a way that makes a lot of sense? And so another way to play that, and how I'm kind of planning to play that today, may not play it today. But, and the reason I may not play it today is just because it's Fridays and it would be later this afternoon. I'm not really excited about that. But what I'd rather do is say, okay, here's an area that I'm looking to target. Why don't I just set an alert up there? And if we hit that price and today's value doesn't migrate higher, then I have a potential opportunity for an intraday short back to value for today. Because then I would be selling above value, which is advantageous. And I could establish some risk. Here's another tangible example. and this is one where people get, all kinds of confused. All right. Here's crude oil. All right. Where's longer term value in crude oil? Yeah, 51.74.95 exactly. So this is our longer term zone. Okay, and then that's multi-session. There's a whole lot of value here. And then if I zoom in on today, okay, I'm sitting right on value for today. So where's the trade? That's the question. Where's the trade? Is the trade, if I'm looking at multi-term value, I could be looking to establish opportunities back toward that heart. I have a really nice magnet from value. And look at this. When you zoom out here, what do you notice about the shape of this composite profile? What do you notice about this? Yeah, it's missing a middle. There's a hole in here, right? Which is, and this is an outside move. Look, guys, we went to 3 times the initial balance extension. That happens in 3% of all trading. So over 1,000 trading sessions, that's going to happen in 30 of them. So over 5 years, you're going to see 30 times that you're going to trade to 3 times the IB. It's just a massive move in crude today. So if I was looking for the longer term, I could basically say, okay, here price has moved higher, but value is way, way, way below it. So this could be somebody, especially if they missed the move. So somebody saw this move and they're like, oh man, I got to be on this, right? How many of you done that? Raise your hand. Like, I've missed the move. I need to be on this. So what you do is you buy, not knowing where value is on a longer time frame, and then they come in the close and they just totally crush you. And you're like, why did they crush you? It's because you were buying above value. And then if you were going to buy today, now today it's certainly a bullish day. The order flow is strong. However, we are below average volume on this move. Could you be long? Yeah, because you're at value on the day time frame. So then it'd be like, okay, well then what's my target? Where would I be wrong? And if you're buying in this area, you'd basically have to defend this zone here. We got to stay in this volume area and then target higher prices. And we've got prior month high here. We've got another decision level up here. And if that's appealing for you as part of your plan, great. I always defer to the higher time frame than what I desire to be active in. So, like if you trigger into like a 5-minute, then what's happening on a 30-minute? If you trigger on a 30-minute, what's happening on an hour? If you're looking at a 2-hour, like what's happening on a daily? Like always defer to the higher time frame just to help add some additional weight to the direction that you're looking to go. And this is where we find traders struggle all the time, is they're trying to be active, especially price action traders who just purely look based on, well, there's this pattern showed up, this price action pattern showed up, so I should be in this trade. You're like, okay, I'm let's see how your account statement looks later.
Hey,
yeah,
go ahead.
Were you gonna say something?
Nicholas has a good question. I wanted to address that quickly.
Yeah.
Do ag products have a tendency to slow down in volume as the week goes on, like indices do? Well, I don't know if we have any statistics on the volume slowing down throughout the week over a long period of time. It just depends. Ags are more cyclic because they're seasonal, and it depends on what season they're in. I mean, really does, and what's going on. Josh, I don't know if you want to add to that or not. Because I've seen some Fridays on like the indices that are crazy, volume wise.
Yeah.
And again, it depends on what type of market we're in too.
Yeah, I haven't run any studies on average Friday volume. I mean, it would be more just experiential that we could tell you that we don't often see high volume on a Friday in the afternoon. Especially not larger institutional stuff, because they're not looking to establish new positions. So it's more retail trade that's driving it. And it doesn't mean that you can't have size. I mean, I was having some conversations with some others in the industry this week where, like there are guys putting on 20 lots in the S&Ps. And the question was, well, why are you putting 20 lots on? And he's like, because I can afford to. So like, so just because somebody has size doesn't mean they have skill. Like that's
that's a great comment. Yeah, because I can.
Yeah, because I can. So that can be a misnomer, and it can also cloud kind of the expectation, later in the day.
And there's nothing wrong with swinging size, but you just need to know what you're doing, have your plan set, and be doing it for quite some time. Never start out with size.
That's right. That's right.
We've seen some of those car accidents in the past. So.
Yeah. Yeah. So let's look at bonds here for a second. And this week we've been talking about in our module was like, what direction is the auction trying to go? If you remember from our conversation last Friday, we were talking about what direction is the auction trying to go? How good of a job is it doing at that? So like if you were short early in bonds, now value has migrated where price is, so you can actually, that's a confirmation of your direction. You can stay in the trade. So until price starts to get away from value, if you were short, that'd be kind of the place that you'd be looking to exit, because that would no longer be an advantageous place to, that would be, an advantageous place for people to start looking to buy. So that could be a place that you can exit. So that's just kind of a high level, and why the profile is so powerful for us is because it helps us know, hey, if I'm sitting on value, like right now with crude, I know a move's coming. But depending on what my plan is and the time frame that I look to be active in, it could mean I don't need to do anything, and I'm just going to set alerts, and until I get away from value, I'm not going to do anything. Because what happens, and you can see this, look at how price is just trading back and forth across here. What would be happening if you're trying to execute trades in here? You're going to get chopped to bits, and the 10 cents there over 1, 2, 3, 4. I mean, you lost $1,000 on a one lot just trying to get in, get out, instead of waiting for another time. Or if you're like, hey, I'm looking to be short back to this area, which that could be valid as part of your plan. Well, then like, what would you need? Where would you define risk? And you could say, all right, well, I'm at value for today. Confirmation would be I'd start to be getting below this value for, getting price, them accepting below value, and I could have risk as the high of the day. That would be a clear definition of risk relative to a plan. All right. So that's kind of a high level. Again, that's gonna be the focus of what our community is gonna be working on next week. If you want to dive into that, spend the week with us. Start, just do a trial week with us. Won't cost you anything, and I guarantee you won't look at markets the same way. With that being said, we're going to look and see if we can find another trade, if there is a trade, and any other questions, not just pertaining to this, but any other general trading questions. We're happy to address those and open the field and see where the rest of the conversation takes us. I can tell you right now, I'm because there's no excess up here on crude. I'd like to see us get to this decision zone without moving value higher and see a late fade. That would be a fade. If this was like a Thursday, that would be a trade that I'd look for. But
I say Friday, it's a little late. If they run it, they run it into the close today. So.
Yeah, and then we likely get higher prices next week. And
yeah, so and then they gap up and go, or they just drop it and squeeze them. So
yeah, the other trade would, if we drop in crude, it's just hard. It's hard to trade this yet today.
It's Friday, so I mean, just like Josh says, on Fridays, guys, you you got to be uber picky. Most of the trade's going to happen within the first few hours of the day, specifically after the 60-minute, the IB's in, and then probably another hour after that. And then unless we've got geopolitical news out and this thing's swinging violently, probably, your Fridays are, we like we like Fridays because they're short days for us.
Yeah,
we don't like Fridays because there's no trade on Saturday. So anyway, so Joel has a question. Is value?
He's asking the value falling price.
Yeah.
And hang on a second. I'm gonna clean some books up here. How did that work?
Case of CL. How do you consider the supply and demand geopolitical risks? Well, that's a great question, and while he's cleaning it up, I'll try to answer that. So Tony, supply and demand, well, for one, we don't follow supply and demand in the trade. Let's just be clear on that. We will watch the EIA reports come out, and the reason that we watch them is because we know that there's going to be volatility surrounding that. Now, we'll take a peek at how they come out, which will give us an idea of supply and demand. Now, recently, with the lows that we made in the crude market, we know that OPEC was going to get involved, and they were going to try to tighten production, which they technically have, but I'm not sure it's happening still. But that's difficult to trade. Geopolitical risks are usually what we call an outlier, and that just happens, and that's why we use stops, for one, so we don't get run over in a geopolitical announcement or some type of war breaking out, or somebody bombing an oil rig somewhere, or something silly like that, or somebody saying something, right? So the way you handle geopolitical risk is, one, use stops, and if you know of an announcement coming out, or somebody's going to say something about oil, then you may want to be on the sideline.
Yeah.
So Nicholas, send us just send us a private message in here, and can you send it there, or send it to Trade with Profile, Josh?
Yeah. Just send it to team.
Yeah, team at
Trade with Profile.
Yeah.
Okay, Joel, your question about is value following price. So if we look at the ES right now, the POC for the day, the most traded price, is down here at 26.60. So at the moment, value is not following price. So there's a divergence here. So if you're long ES, you've either got to have a longer term value reference, or you're just letting this thing run out. There are some places here in the profile where we could migrate value higher, and that would change the situation for us a little bit. So let's look at how many contracts. So we got 16,000 contracts is the POC. So if we did 3,000 more contracts right here at 26.68, that would migrate value higher, and would be fuel to allow this thing to keep moving. So I would expect either ES spends some more time here and migrates the POC higher, or we just keep pressing higher. And by the way, if this is a trend day, we're most likely going to see above 26.75 today. And then late in the session, we trade sideways to, they dump up a whole bunch of contracts, and that pulls the POC higher. So there's a little bit of where is it, but also what type of day is it? And this is a trend day. We're one time framing higher. Every 30 minutes, we make a higher high and a higher low, higher high, higher low, higher high, higher low. So until that changes, there's nothing to do. Yeah, team at tradesprofile.com. Let's see. Let me open my email, make sure I get.
Tony, did that answer what you were looking for? And if not, just let me know. I'll elaborate a little bit more. Just, we really try to stay away from news. We see it happen, like we saw it late in the session yesterday before the Netflix announcement or earnings announcement came up. It looks like there was some Chinese flub out there, and it just ran the market up real quick, and they brought it right back down. So that's the tough part about trading. But like Josh said earlier, the only thing we can control is our risk at this point. So, and sometimes it knocks you out. It's a pain. Believe me, we don't like it, but it happens. So, all right, good, thanks. All right, anybody else have any questions or? And while we're waiting for another question, something I want to say about the profile is, remember, this is not a system to trade. This is a tool. It's like, and I hate to say indicator because when I think of an indicator, all I think of is lagging indicator. And, I know people badmouth lagging indicators. It's not that they're bad. You just have to understand they're lagging, which doesn't give, detailed pricing on what's happening in your current market or instrument. And what I mean by that is what is, who's in control, who's stepping in, buyers, sellers, et cetera, et cetera. We can do that with the profile. It also structures price differently. That, that is, as Josh pointed out when we were looking at value on crude oil, that structure right there is invaluable. It's incredibly, it's incredible. And so when, and I apologize, it's trash day in my neighborhood and they're picking it up. So when, can you hear that, Josh?
Yeah, I can. That's
oh my gosh, I have a good microphone or his brakes are bad. So when you look at that, you can develop trades around that kind of stuff, back to value, away from value. Josh had mentioned we use the IB quite a bit, right? The first hour of trade. That is probably our biggest, that's probably the biggest thing we use in the profile is the first 60 minutes of trade to establish a couple different things. One, establish what the range is, see who's in control, if it meets what our bias is coming in the morning, and then lastly, how to trade around that, because that helps us control risk again, which is important. So the profile, when you look at it, it's not, what I would like what we say, a system where you're just going to plug it in and go. There's a few different trades around it, and the important thing about trading long term is, we had talked about earlier, is that we've been doing this for quite some time. All right. I don't even like to look at that because it just reminds me of how old I'm getting at this point. But at the same time, to be able to survive that long, you have to do certain things, and you really do. Josh was talking about the guy who's swinging 20 trades. That doesn't mean he's a great trader. It just means that he has capital to waste and blow. Okay. And maybe he doesn't have it to blow, but he's going to.
Yeah, right.
Okay. So hopefully what we work with people on is using a profile to develop a trade plan for them. And maybe you already have one. Maybe you've taken a Dalton intensive and you came out, and maybe you still don't have the trade plan, but you're really, you understand the profile and stuff like that. So we help our team, decipher their trade plan, and make no bones about it. It is your trade plan. Now, we have a lot of similar trades. I'll be the first to admit, Josh and I do. Josh does trade a couple that I don't trade. But we understand what a trade plan is, and that it's invaluable to you, and to be consistently profitable, or what's commonly known as CP in the industry, you do need some type of plan. And it's just our belief, and this is a great tool for us. And I think and I don't speak for Josh, but I think he would agree that until both of us started using the profile, our trading was probably mediocre at best. So anyway, how did the delta look around the first 5 to 15 minutes this morning in the ES? Great question. It was probably up and down. Because the first 5 to 15 minutes is all the trades that are in queue, and all the new trades coming in off the open, and it gets pretty crazy whippy. Or if they just drove it at that point. It depends on how the morning is. So what was it like this morning,
The cumulative delta was already positive, and that's because we had a gap on the open.
Did he say Q?
Well, he just asked how the delta looked.
Okay.
So when I look at that, I look at, okay, well, what was it on the the first 5 minutes? So we already had positive cumulative delta, and then you can see, to JP's point, like on a 5-minute basis, it was just kind of up and down as the fight was going. And then it was really this big spike, which this was the a Bloomberg report having to do with a potential offer from China to purchase some $1 trillion or whatever to make the trade balance better. That was where it really kind of set the stage, and the fact that we couldn't get back below that scene of that crime, they just kept piling onto it, and we've just had we have another buying order flow spike, we hold, we have another buying order flow spike, we hold, we have another buying order flow spike, we hold, we have another buying. So this is until we start taking some of these out, like right here, we may be potentially, you can see there's some selling order flow coming in, which, by the way, I was just looking at this on the longer term chart. Why are we pausing? Because we're into a high volume node from last month. So there's a value reference that we're coming into that's multiple sessions. That's like a week of data that we're coming into. Well, that's going to be hard for the ES, even though we're trending, to punch through it. But if it does, and that represents this area right here. The next area is this one, and this is the biggest. That's a big one. If we can get above this area, this 2745 area, I'd say your correction to the downside is over. If we can close a week above that, then hey, we're back to going towards all-time highs.
Yeah, by the way, Tony, that was your geopolitical thing that we talked about. There's some news out of China that affects the market. Now, something happened before the open. Not real sure if that was tied to any news. We couldn't figure it out, but they ran it up right before the open. Could have been algorithms playing games. I think we were 3 minutes before the open on the deal. So it happens. So anybody who was short going into that and got stuck on that news event. Was it rumor? I don't even know if it was rumor.
Which one? The
Chinese news event?
Total rumor. Total unsubstantiated. Nobody knows. All right, so let me pull Nick's. I've got Nick's chart here. This is a good one.
Oh, sweet. He sent it. Nice.
Yeah. I gotta pull up on this.
Thanks for sending that in, Nick.
Bear with me. Oh, that reminded me of something that's really funny.
While we're waiting for this, everybody just type in where are you guys all from? Yeah, overseas, here in the States, whereabouts? Jersey. All right.
Okay, so this is ES. This is Bookmap. So if you're not so what Bookmap is showing you is Bookmap is a way to look at order flow of where historical order fills were. It's a way to try to kind of profile the intensity of certain orders. So you've got lots divided in 3 parts. The daytime frame trade representing 39 under, the intermediate 40 to 99, and the OTF 100 and more. As prices go higher, you can see who's most active, so it's a great way to gauge targets and stops according to which the time frame. So the question, so what he's saying is he's got this filtered to show him, you can see it down over here. Ooh, that's not the one I want to show. Well, that's not. Hang on. No. Where'd it go? Hang on a second. All right. So you can see over here, he's trying to show where the day time frame trader is, the other time frame trader, and the intermediate. And that's kind of like as this is building, he's trying to parse out where the larger trader control. And his assumption is the day time frame trader is largely driving this. So the question I have asked is, what led you to determine that 39 and under was DTF, that 40 to 99 was intermediate, and 100 was OTF? Okay, so statistical study by FT71 over the course of the last 5 years using tick data. Okay, so I know Murad, and so I've looked at these studies, and so here's something to consider around this. Okay, and what it basically says is that size represents who the trader is, and just like I talked about earlier, I mean, there are people who swing large size who are not, they're not institutional, they have no plan. And I ran a desk where I used iceberg orders. And if you don't know what iceberg order it means, it's like if I had 100 lot, I was only presenting to the market 5 at a time. So I looked smaller than I was. So I mean, I understand this. I understand the rationale. There is a rationale there that size means that they're a certain type of trader. And I want to caution you from making that assumption. Just think of size as size. And then like what's happening after the size? What's the follow-on behavior of that, right? If I have large impulsive buying size, that should lead to what? It should lead to higher prices following it. So if I see an institutional buy hard and then we should keep going because everybody else who wasn't the institutional is going to jump on top of them. If I see price moving hard and we get stopped and we don't go any higher, then that was somebody who just got squeezed. Does that make sense, Nick? So it can be helpful to look at it. I would want to say, in terms of the rationale of the importance of that, of who's in control. There's a much easier metric to determine who's in control, and that's just IB extension. And IB extension, and then how do we trade relative to longer term value reference areas? So here's an example. Okay, if we look at crude today, and you'll see this better if I go over here to the daily chart. All right. Okay, I had 3 decision levels higher this morning that we cut through like a hot knife through butter. All right, now those were more like intraday decision levels, but also we had a decision level right here, which was a prior naked weekly point of control, meaning that was the most traded price for that week. And we absolutely blew through that thing. I mean, we just didn't even blink. We just blew through it. That behaviorally told me that everybody, OTF, DTF, were all about this thing. And you could look at it and go, oh man, we've moved $3-4 since $3 since the Globex. This thing's done. Is it? I mean, yeah, that's an exceptional statistic, but until I see a behavior that says it's done and there's sellers coming in, it's not done. And crude can move a lot more than what's moved today. I mean, all I got to do is go back and look at this day. I mean, we can move we can move $10 in a day. I mean, that's inside the price limits. So I think there's easier ways to discern control than trying to filter based on a certain amount of contract volume. Because I know the tricks from being in the institution, what guys did to try to hide size. So it's still valid, I think, to look at size. So I don't want to say don't do that. I just say just keep it for what you can objectively say about it. Is it's objectively showing me a size of order, and then the question is, well, then what's the follow-on behavior? Because it could be a silly guy trading 20 lots or 50 lots because he can afford to, and he has no plan, and he just got stopped. But man, I appreciate you sharing that.
Nobody does that.
Oh yeah, nobody.
Anybody have any questions, concerns?
Yeah, that's a good way to look at it. I mean, over the course, I mean, just if you're looking at that behavior and you're looking at that dynamic and then just saying, okay, what behavior comes out of it, you can glean some really cool insights from that, which is where we always go back. We always go back to what's the behavior,
We're more behavioralist than we are anything.
Yeah. I talk to anybody who ever traded on the floor, and they're like, it's all behavior. It's all here we go. 2 times IB in the ES, trend continuing. Now again, we're above value. This is low volume, so trade location. There's nothing to say be short, but this is the place where you got to be protecting your longs. For me, by the way, if I was long, and disclosure, I'm not, I would protect this area right here. That last buying order flow spike, that's my stop if I was long. And until either that one gets tripped or we have another one. So that's where I'll put an alert. And just keep trailing it on up. Don't need to do anything until then. Makes it simple.
Yeah, just that's the key, is to keep it simple. And there is a bit of waiting. That's what really does a lot of traders in, is they don't understand the waiting game. So would you consider order flow footprint for short-term behaviors? That's a great question, Tony. One that, yes, the short answer is yes, but let me clarify that a little bit. We don't trade the footprint outright. We use a footprint if, some people do, some people don't. We use order flow. That'd probably be the best way to look at it. So we do order flow, and sometimes it's in the form of the footprint. Sometimes, as you can see, Josh has a 5-minute candle order flow to the left of his profile there on the, Josh, want to blow that up for him?
This one?
Yeah, can you blow the chart up?
Yeah.
So you can see the mini profiles to the left of the TPO chart there. Yeah, so that's an order flow that we use. We use it when we're in an area of interest, but we will not trade that just, back and forth, up and down. It's too much noise in there. So
yeah. So that might be like say, for example, my premise was I'm expecting longer term traders to step in because we already identified that this was a higher time frame value area that we've just traded into. So I'm going to expect sellers to say I wanted to expect sellers to step in. Okay, well then what would I want to see if I wanted to trigger? I would want to see high volume selling. So from an order flow standpoint and a price action and a volume. So I actually have some decent selling volume yet, but on the histogram side, I'm not seeing the impulsive selling taking place yet. But that's where I could start looking at that behavior. But I didn't look at it in any of these prices because they were not part of a plan. It wasn't anything I was interested in looking at. But now we're in kind of this higher, we're back in this long-term composite area that I'm like, okay, if we can't get above this thing, or if we poke above this and come back below and develop some excess here, we trap these late buyers, right? There could be an opportunity. And again, we have not yet migrated value higher. We'd have to at least trade back to 2668 just to migrate the POC higher.
let's clarify a couple things. He talked about getting trapped and stuff. We are into lunchtime on the Eastern Standard time zone, which would be the East Coast in the U.S. here for those of you who are not in the U.S. It's Friday. We also, if you're not watching the news or heard about it, our government is shut down right now. So, and we're also up against a holiday. We have a holiday on Monday. It's a banking holiday, so the markets will be closed on Monday here in the U.S. So we have a lot of things that are saying, yeah, don't trade, especially going into Friday afternoon. Not only don't trade, but there probably won't be a lot. Now, does that mean we won't have a liquidation event going on into the close? We could. I mean, we could also have a buying event going into the close. You never know. But if you're trading that late on a Friday, I wouldn't encourage it. I just don't see the reason. So, do you consider volume POC more important than a TPO? Yeah, well, yeah, I don't want to say we do, but we do. Yeah.
We do.
Okay.
I have high conviction about that.
Yeah.
And it's a great question, John, and it trips a lot of people up. So here's the rationale. If you talk to guys who trade on the floor, if you talk to Damon Pavlidis, if you talk to Pete Stottlemyre, if you talk to Dalton, when Pete was developing the tool, they were trying to approximate trade volume. Because when guys were first using the profile, they're like drawing it hand drawn on graph paper in the pit. Like that's kind of how Damon got his start, is he was actually profiling, like had read Pete's research, saw what was happening behavioral in the pits, started drawing it on graph paper. And I've met a number of guys that used to trade in the pits that did the same thing. And they were trying to figure out was, where was the volume at the prices, but they couldn't get real-time volume data. There was a mechanism called the liquidity data bank that you could reconcile at the end of day where the volume was. And if you ever looked at the old CBOT market profile manual, it talks about that liquidity data bank. And that's because you're trying to reconcile where price spent time, and you were assuming that if it spent a lot of time there, it also spent volume there, which was a good assumption. It was a good operating assumption. What we find is that there's actually divergence that takes place. And we actually even have that, if I collapse this profile today, we even have that today. Look, volume point of control for the ES is here, but the TPO, the time point of control, is probably here, or somewhere in here, because you have three TPOs here. There's only two TPOs here, but that's where the volume is. So there's a divergence between time and price. And so because today we can see volume data in real time, that's superior. And I actually color code. So on this market profile graphic, I can set, and other platforms do this as well, but I can set the market profile POC data. So I can set the POC data to be trade volume, or I can set it by TPO, but I set it by trade volume. So there's my soapbox on that.
I concur. POCs, volume POCs, far superior than TPOs most of the time. Yeah.
Yeah.
Well, it's volume.
Volume.
And the eyes have it. Yeah. So think about what Josh said with the description of the pits. Now they used to track trade or volume differently, but how was volume tracked when you're in the pit? It was by noise, right? More volume, more noise, or you could even say more volatility, more noise, right? And it typically meant that volume was coming into the market, okay? And there's a lot of swinging back and forth, and so that's how they tracked it. Today we have such a big advantage of that. We don't have to be in the pit and push and shove. We don't have to live in Chicago, which I do like Chicago, so it's no rip on them. But there's a lot of benefits to what we're doing today. It's a lot. I don't want to say it's easier, but it's more efficient. So by extension, you also use the volume value area, then not the TPO one. Yeah, so we do, but Josh, you want to talk about value? I've got a I mean, are you talking about value areas, like value area high, value area low? Is that what you're talking about, John? Because yeah, correct. Okay, so Josh, you want to take that one?
Yeah. So the rationale. Hang on a second. Let me just film. We got to film some orders here. Just kind of reducing some size on the weekend. Oh, nice. So let me. This will be easier if I pull up. And by the way, everybody, we've got about 4 more minutes, and then we're gonna. Well, I'll stick around a little bit longer. But if you need to leave, well, just if you have questions. So the idea of the value area is based on statistics. If you ever study statistics, you'll know that if you look at a data set, there is a statistical mean, and then there's a normal distribution of data plots, right? And so 68 to 70% of that data is what we call the standard deviation from the mean. And then if I go one standard deviation outside of that, that's one standard deviation out. And then 2, this is where the term outliers come in. They're statistically irrelevant. They're anomalous in terms of how we think about that. So what the profile, I mean, if you just turn this on its side, the profile is doing this. It's showing us where is the bulk of the trade. Right now, here's some things to think about in terms of value area and all of that. 70% is a lot of the volume, so it's not real great at helping you pinpoint specific areas. And so I know that there are a couple setups that look at like value area high, value area low. I find that it's especially if it's a rotational day. So if it's a balance, today is not a rotational day, by the way. Auction is attempting higher. Like it's a trending day. This is textbook classic trend day. Every 30 minutes, higher high, higher low. So until that stops, we're past 2 times the IV. That's another structural characteristic of a trend day. So like unless they really come in and slam the door on this thing. If you try to short this, you're just going to get pain. However, if it's a rotational day, and let me find a product that is doing some rotations, like soybeans here. Okay, in terms of what's happening is that, especially in this case, because you had an IB that was really wide, and then what's going to happen is the auction is trading back and forth, to determine the fairest price. Well, then you can use the value area extremes, which would be like here or here, as areas to look at. Hey, they're outside of that normal distribution. So if somebody was long there, they might get trapped. If somebody was short here, they might get trapped, and that could be a good place to fade the move back in. So in that sense, that's how we can use value area. The other place that we use value area is to look at how can I think about an entire day. So in my review from one day to the next, I'll look and say, well, where was value relative to the prior day? So look at value here and here. You had 2 days overlapping lower value, and then a big day that actually comes back and cleans up a lot of that. That was a good clue that buyers are in control of this auction. There was actually, if you look at the NASDAQ, what gave you a clue for today, and my plan today was that, hey, unless we could get below 66.87, it was the buyer's auction to lose. Notice the value area today relative to the prior day. It engulfed it. So not only did they accept yesterday's value, but they expanded on that. That's a very bullish behavior. So those are some thoughts on value. Yeah, I did. Yeah. So Nick, you sent me a video on volume strips, which, like I understand the rationale of what Pete's talking about there. Which it's just it's another way to look at volume. It's a way to look at behavior. It's never really gotten any traction, and I haven't really seen a need to. I haven't seen distinct edge around it, so I haven't integrated it. But what Nick's referring to, you can search for Pete Stottlemyre volume strips and get kind of an idea. It was just another way to look at volume.
This newer stuff, right?
Yeah, it's kind of his voodoo. it's his version of Elliott Wave or whatever. Like it's kind of voodoo stuff. All right, well, here's the deal. We're gonna for anybody who needs to leave, let's wrap this up, and then we'll stick around for anybody who wants to keep asking questions. Okay, so next steps. Here's 2 questions to practice this next week. Right? Where is value in the time frame that I'm looking to participate? And when I talk about value, like where's the volume, the concentration of highest volume at price? Where is that in the time frame that I'm looking to participate? So if you participate in a 5-minute on a session or a 10-minute or 30-minute, where is that? And where is value in one time frame higher from where I'm looking to participate? So if you look at like value on one day, where does it look like for the week? And how are those in relation to each other? And see what type of insight you glean from that. I think it can be really insightful in terms of how auctions behave, where these timeframes diverge and where they also coalesce. And then if you want to dive in more specifically around this, get started with our trial. Spend the next week with us. It doesn't cost you anything. It's a opportunity for you to check out what we're doing and get a feel for it. I don't know a reason why, if you haven't done that, why you would not join us. It's killing it, having a lot of fun. But that's what our focus is going to be this next week, is looking at how do we discern price and value relationship to find opportunities across multiple timeframes. And then if you're on Twitter, you can follow us with Trade with Prof, or on Facebook, we're on Trade with Profile. And if you have any questions, you can always send us an email at team@tradewithprofile.com, or give us a call. And love any feedback on these sessions. I think we're pretty committed to doing these every Friday this year, and they've been a lot of fun, and the questions have been excellent. So I mean, you guys make the session by the questions you ask. Just it's stuff that we've forgotten that we need to think about. So that's great.
We've had some really good ones, so
yeah,
keep them coming. So I'll stick around with you just about another 5 or 10, and then I'm shutting down for the weekend. Thanks, guys. I mean, any questions, parting questions? I mean, something that didn't get answered. I mean, markets, products, profile. See, we've answered in the past why the moon is round, why the sky is blue. We haven't had the question why the ocean is blue, but we know that. But yeah, anything, guys. JP, what is your journaling process like? Oh, great question. Every day, I got a composite book. Mine composite books are blue, and I buy them by the tens. So every day I journal, a little bit about a couple things. First, what is the day type in my mind, my bias when I come in the morning, and then what it ended up being at the end of the day. 2, did I follow my plan? Okay. I will give you again, this is for me. I talk with Josh and I, we speak all the time, obviously, but at the end of the year, I said, hey, Josh, I said, I go back and do all my trades, all my statistics for myself and analyze them for me, because I want to become better. And what I found was the trades that I lost, 80% of them were because I didn't follow my plan. Go figure, right? Jeez Louise. So I write down trades I took. Were they part of my plan? Now I also track my trades in spreadsheets too, but in my journal I do that. And then if anything like geopolitical happened, or I didn't, I did something really stupid, and we're still human, okay? And Josh and I still make mistakes in our own personal trading, but we make just a lot less of them than we used to. And so you can really write anything you want in your journal, as long as you feel that it's going to help you with your trading. But now, here's the key to the journaling. It's just not writing it down. Hey, after the end of the week, go back and look at it, and don't make it a book where you have to read 10 pages, but go back and look at your bullet points of what happened, and then take those bullet points as things that you may want to improve upon, and really make those the focus for the next week, and keep doing that every week. And that journal will definitely help you out. And also you can use it to write down things that you actually see in the marketplace that may be showing up more and more, like, hey, that IB break is working really well. I see how I can identify my risk like that. Maybe I want to put that in my playbook, right? So hope that helps.
So let's see. Joel asked if we can get a pullback to 26.64 to 68 to pull value up. Would that be a good spot to go long? It depends on what your plan is. I mean, it's a trend day. As long, let me give you enough information that doesn't have all kinds of problems for you. So trend days, things that we should not see is we should not see trade back below 26.60 today. That would be a 50% retrace of the range, and that would negate the trend. That would create selling excess that actually get us back to the open, and then that would suggest lower prices, that all of these participants were wrong. That being said, if we could migrate value here, and say we did get a pullback here, if you had really tight risk, as long as we held this level, yeah, there's potential for trade here and then higher next week. Those are potentials. That's not part of my trade or plan. But is that a reasonable expectation on the auction? Yeah, it's a reasonable expectation on auction. I wouldn't do it. I'm not going to do it.
I is done for the weekend.
Yeah, the trade that I would rather like is, and the one that I would look for is Tuesday. Okay, so JP said we've got a holiday on Monday. However, futures are open for half of the session. It'll be low volume, probably 50% volume. I won't be trading on Monday, but what I would love to see is I would love to see us keep trading higher on Monday in like a tight range, and then like keep the point of control for today, like in this, like say we never migrate it higher. Say point of control stays here, and we know that the longer time frame is way down here. I would love to see us come in on Tuesday and watch everybody come back to their desk and absolutely crush this thing on the open. And they'll just, all they're doing is just all of the retail Globex trade that is, small, got too ahead of themselves, and then you'll see somebody come in and take profit on that. Really, that's a great trade to be on. But it's probably gonna be Tuesday, not today.
Yeah, I won't be trading Tuesday or Monday as well, so it's just not worth it.
What am I going to be doing this weekend in order to be a better trader for next week? So I'm always looking at different ways to visualize. So one of the things I love about Window Trader is the fact that I can build the chart exactly how I want to see it, so that I can see the behavior that I want to see. And I do like this layup where, so most of the time I spend like this, where I'm just looking at the profile. I'm looking at the volume profile. This histogram in the middle here is the order flow at price. So you can see that all of the big movement was buy orders. That's where all the volume was, buy orders. Okay. So something just triggered. What just triggered? Oh, crude 73. Let's look at that real quick.
And I want to take a stab at that question too, because that's a great question. That's probably one of the better ones we've had.
Okay, hang on one second. Shoot, where's that? Okay. So I like this profile, so most time I look at this, but then when I get to an area that I'm interested in being in, then I'll look at the smaller time frame. So this shows me 50 or 30-minute volume histogram, so I can see where the intensity is on a 30-minute period, and then I can see each 5-minute period inside of that with the order flow. Now, what this doesn't show me, it does show me that, hey, this was a higher volume 5-minute buying period. And this one was actually higher volume than this one, which appeared to have stronger order flow. So what I want to be able to see is I want to see and isolate the stronger behavior. And one of the ways that I've been doing that is I've been working on a new, so this is 5-minute data, and this is isolated. So in this 5-minute period, this is showing me where the red is the top 10% of volume, the magenta is the top 30%, and the white is the bottom 40%. And then this is the order flow delta, and so I can see the summation of those. And I'm going to nest that inside and just kind of see if that can help me pinpoint and tighten up risk more. So that's a, I'm always just trying to, I know what I want to see, and this is the beauty. If you understand the behavior in the auction and you understand what you're trying to see, then these tools become really helpful, because you know how to tweak your approach to be able to see things more clearly. If you don't know what you're trying to see, if you don't know the behavior that you're trying to see, and you're just like, ooh, I think this mix of indicators will be the magic holy grail, then hey, guess what? That's not going to work for you. Like that's just going to cause style drift and problems, and you're going to lose money. JP, you were going to say something about this.
No. So weekends are good for a couple different things. One, just getting away from the markets, getting away from your computer. Two, but it's also review. So I usually try to stay away from a computer on one day, which I will be. And then I go back and review. I print off literally every chart that has a trade on it for me every week. And so I'll actually go back and review each one. Again, I'll couple that with my journal to make sure that I'm entering, exiting, make sure, where I did something stupid, or if I did something stupid, I'm going to note that and try to eliminate that. And I'm also working on order flow material right now, similar to Josh's. So I will put a little bit of time into that as well. And, get prepared for Tuesday. Now, most of that typically comes on a Sunday for me. But in this case, since we're closed on Monday, I'll probably end up doing it Monday just to see how the half day session traded. So, yeah. All right. Anything else, guys? I'm going to stick around for 2 more minutes and then I am out of here. Joel's going to read John Carter's book. That's a good book. I got both of his books. What's a good book, Josh, for trading? There's so many of them out there. You ever read the Pitbull, Marty Schwartz's book? That's a good one. That's a real good book. Yeah. If you guys don't have that one, that's a good one. Marty Schwartz is a phenomenal trader. He made hundreds of millions of dollars trading the ES. And I think he trades, I think he still trades. I'm pretty sure he does. He's that personality. So he trades, I think, crude oil options now. So
2 books that I've enjoyed. One Good Trade by Mike Bellafiore.
Yeah, I was just looking at that one too. That's a good one.
A good one. And that's aligned with, we talk about when people start with our process, we give them a key trade as part of their playbook, or an anchor trade, and work on, honing that anchor trade. So we just look for that one trade. And Mike really affirms that. Another one, this is not a trading book, but it's relevant to trading. So it's called Decisive by Chip and Dan Heath. And it's how do you make better decisions, and how does the brain work around making decisions? Understanding how you think cognitively when you're making decisions, and how your brain will actually trick you into thinking something is true and it's not.
That ice cream's good for me.
Yeah, well, and we all know this too. This is also like, so if you haven't, this is why we talk about these. We talk about 4 questions to ask before putting a trade on. Is because if you don't define a trade and where you're wrong, as soon as you get in the trade, your brain will start fighting you, even if you are wrong. Like if you've ever experienced this, where you're like, well, I put that trade on, and here was where I originally thought that I was going to get out of the trade, but then you stay in the trade, and then you take a large loss, and you're like, well, why did I do that? Well, it's because your brain is actually wired to not believe that you are wrong. It's evolutionally designed to do that. It's a survival technique. It's not a good survival technique because you lose. So we need to go to a heightened level of awareness around that. And a way we can do that is to, predetermine where am I wrong and where will I get out, and know that the brain's going to start throwing signals at me. That's just why, hey, if I put in a trade, I put the stop in at the same time I put on the trade. Yeah, that looks hot. Touch it. It can't be that hot. Yeah. That burned me That burned me once. It won't burn me again.
Yes, exactly. So, all right, guys, I'm going to call it. I wish everybody a great weekend. And Josh, I don't know if you're going to stick around some more, but I'm going to hop off here. So
likewise.
Wish you guys all the best. Thanks for showing up. We'll be here again next week. And if you're going to take a trial with us, we look forward to seeing you next week, and we'll go from there.
All right. Peace, everybody.
All right, take care.